The best healthcare is there in ways big and small. There when we most and least expect it. We may not see it, but we feel it. It lets us know we're not in this alone. Everyone deserves a healthcare partner who never quits. One who's there for what matters. United Healthcare. There for what matters.
It's not just another day in your life. Things are changing for the better. At Comcast, we see those changes, and we're thinking about how we use technology today to live, work, learn, and play. And we're building for the future now, so we're better prepared for the wants and needs of tomorrow. That's why Comcast is rolling out multi-gig internet speeds to more than 50 million homes and businesses before the end of 2025, making our already industry-leading network even faster, smarter, greener, and more reliable. Over the decades, Comcast has been your partner, working hard to serve your community, and will continue to be your partner. We're expanding our gigabits so you can enjoy the tiny bits that matter most.
Hey everyone, welcome back to another week of the Financially Fit Podcast. I am your host, Andre Creighton. Thank you for those that are back again, continuing to rock with me. I love you guys. I appreciate y'all. I hope that you're getting something fruitful out of this. And for those that are new, welcome to the show. And I hope that you continue to rock with me and that you find something that you can take away and apply to your life and your journey to becoming financially fit. So, usually for those that are new, I start off my podcast with a story that's related to our topic. However, today I have something special for you guys. I'm actually not going to tell a story because we have a special guest, Steven Spears. He is the story. So if everyone welcome Steven Spears. Steven Spears is the Senior Vice President of Twin Cities Banking for Bremer Bank. In that role, he oversees secondary marketing, affordable lending, and small business functions, in addition to the banking and meetings commitment to establish a greater presence in serving BIPOC communities and businesses. You know, the really cool thing is Steven brings over 25 years of financial services experience and is a member of the Bremer Senior Leadership Team, which is really cool. And we're very, very fortunate to have someone of this caliber on our podcast here today. So, Mr. Spears, welcome to the podcast. I look forward to our conversation. I told everyone a little bit about you, but I would love for you to be able to tell us a little bit more about your role as an SVP and a little bit more about yourself.
Well, let me first start off, Andre, by thanking you for having me this morning, and also just thank you for the commitment and passion to kind of have these conversations. I know that when you first introduced this concept to me, I just thought that it was outstanding, and just have been looking forward ever since to being on your podcast. So, a little bit about my role and what I do at Bremer Bank. I joined the organization about 3 years ago. And if you can kind of think about that, I actually joined the organization right in the midst of our pandemic. And part of what drew me to the organization, is really Bremer's commitment, specifically from our leadership and specifically from our CEO, Gene Creighton, who really put together a very thoughtful reaction to some of the unrest that we saw in 2020. In that reaction and our commitment to really do better in this banking space, as a result of what was revealed to us in some of the aftermath of 2020. We really focused on 3 areas of our banking practices that we felt we could do better at, or we wanted to do better at. Those 3 areas being how we address the affordable housing issues that exist within the Twin Cities, how we really show up and work with our BIPOC entrepreneurs and small business owners, And then finally, really, how do we show up in community, specifically in our BIPOC communities? So my role is really centered around those three actions that we called out in those banking practices. So I get an opportunity to work within our mortgage area, understanding how we can better serve all individuals, but with a specific focus on understanding how we can better serve BIPOC individuals, low to moderate income individuals, and making sure that we can try to do our part in closing this housing gap that we know exists so prominently here in the Twin Cities. And then also I work with our small business team and lead our small business team here in the Twin Cities that really, again, has a focus on serving all customers with a particular focus on our BIPOC entrepreneurs. And so over the course of the 3 years, I've really kind of been focused on that and making progress in those areas and have truly enjoyed it. So that's a little bit and maybe too much about what I'm doing here at Bremer.
Never too much, never too much. You talk a little bit about closing that gap for, a lot of, underrepresented communities that usually can't afford housing. In an environment today where interest rates are really high, what are you seeing? What's some advice you have for someone that's maybe thinking about buying a house or even maybe selling their home, right? Because if you sell your home, you got to go and find one to live in or either downgrade or something like that. So what's your advice for someone today?
Yeah, Andre, you hit on a couple points there that maybe I'll just elaborate a bit and then kind of go into specifically your answer. The challenge around affordable housing, has many facets. And right now, we are being faced with a couple of very, very critical issues in there. So that really center on the affordability of houses. So we know that over the course of the last 3 years, we've seen kind of exponential gains in the price of homes. And now we're faced with what you talked about here. While not historically high interest rates, meaning over a 50-year period, but certainly near-term historical high interest rates. And those two things really, do combine with making it even more of a challenge, to get into a home. And so, our response, I think the response to that is, continuing to try to understand how we can position our programs to make sure that they're still the best fit possible in the current interest rate environment. But specific to your question around, what is advice around buying or selling a home? It really isn't, in my mind, not just driven by the interest rate. So when you buy a home and you sell a home, it should be a decision based upon a number of circumstances within your life. And if we point on buying a home, you certainly feel like you have a need. You understand that buying a home is not just a transaction. It's a transaction that's going to lead to a long-term investment. And so you have to try to understand at this point in time, first and foremost, are you ready to buy a home? Meaning that you understand the commitment, understand what it takes to maintain that home, and can you afford the home at the current interest rate and the current prices of the home and the home that you want to be in? Because I think that that's something that we have to understand too. If you're not satisfied with the home that you have, then you're going to regret that significant purchase. And unfortunately, it's not a transaction that unwinds without some costs. So it takes a lot of deliberation, it takes a lot of thought. But the bottom line is that interest rate is a factor in why you should buy a home, but you should never let interest rate deter you from purchasing the home unless it is making it cost prohibitive. And at that point, you either have to do two things: wait until potentially interest rates go down, or wait until you have saved enough money to put down on a down payment so that you can keep your payment within your budget.
That's awesome. That's awesome. I really appreciate that. I can appreciate the fact that you say, you shouldn't just think about the interest rate, but I think sometimes, people are thinking about the payment and things of those sorts. I said I wasn't going to tell a story, but you kind of sparked something in me. So as I was thinking about, the interest rates, I'd love to hear your opinions on, fixed versus variable, especially in a high interest rate environment. I know they always say that if you're going to do a variable interest rate, you probably should get in when the interest rates are high because they're going to come down. and hopefully you'll get that lower interest rate later down over the life of your loan. Well, my story is my parents got their first house. They're blue collar workers, didn't really know much about the mortgage side of things, and they got in when interest rates were really low on a variable fixed rate or on a variable rate, and then 15 years go by, and their balloon payments coming up. The rate environment was high, and they were on the total opposite side of where they wanted to be.
Yeah.
So I'd love to be able to hear a little bit about your thoughts on that. So hopefully the next person can avoid something like that.
Sure. Great question, and certainly, that idea of a variable rate or a fixed rate is something that should play a part in your decision, and certainly is part of everyone's thought process as interest rates have risen, because typically in a typical market, you're having some opportunity on an adjustable rate. We're kind of in a unique market right now where the variable rates really aren't that different than our fixed rate. But the way that I would answer that, Andre, is that every decision that you make, as you would know, in life, in work, needs to be a deliberate decision. So it needs to be well informed. And that's absolutely the case within purchasing a home and establishing and originating a mortgage. If you're making informed decisions, that's what's most important. So if you understand that if you're going into a variable rate mortgage, if you understand why you're going in there, understanding the benefits and the potential issues that can come across with that, if you're making that decision informed and you're preparing for those inevitable potential changes, both the positive changes, the idea that my interest rate could go down or I may have to refinance, but then taking a look at that and saying, well, what if interest rates don't go down? Or what if I'm not in a position to refinance? What would I do at that point? And if you don't like that scenario, as you play that story out in both cases, and you know that you can establish a fixed rate, even though that may cost you more today, maybe that is the best informed decision that you can make. So the idea, I won't make a commitment here today to say that a fixed rate is what everyone should go to versus a variable rate. What I would say is that if you understand and can make an informed decision and you've played your story out on both cases, you have to then understand what potential inevitability are you most comfortable with, and then make that decision informed. And then hopefully in that case, the positive outcomes are what ultimately you experience.
Thank you. Yeah. I mean, what I heard was preparation, right? You need
Yes.
that preparation and be prepared for the inevitable. With that, I want to segue then also to, part of that preparation is having a banking relationship and finding a bank that works for you, right? And you know, after the kind of downfall and unfortunate events of SVB Bank, I know there's been a lot of anxiety swimming with people around banking in general, and people are starting to feel like they should have two or three or four banks instead of having all their money in one place. Can you talk a little bit about you know what's your perspective? Has banking changed? Why or why not? Why or why not? Why is a banking relationship important?
Sure. Well, certainly earlier this year, we went through a period of time, around that first quarter in March, where banks were certainly in the center of the conversation around the news cycle. And we did have some unfortunate failures of banks, including the one that you mentioned, SVB. And my quick response to that is that um, there's typically a unique set of circumstances that really lead to a bank failure. So has banking changed? My answer to that is that, yeah, banking has changed and we have to change, and it changes every year. But has banking changed from a safety and soundness standpoint? It has. And in fact, I would argue and say that we've, as an industry, gotten more safe and more sound. Probably a quick analogy that I make here is that um, we drive cars, and we know that there are a lot of gauges that exist within our car. We're looking at oil pressure, we're looking at temperature, we're looking at pressure in tires, and probably most important, the gauge that we probably pay most important to is our gas level. And generally speaking, we probably only pay as as drivers, we're probably paying attention to that and not really paying attention to the other gauges. From a banking standpoint, we have a number of gauges that we look at, and there's certainly some that are more important than others like the gas gauge, and some of that is our liquidity ratios and our capital ratios. And those are ratios that we're looking at consistently as leadership within the bank. And not only are we looking at consistently as leadership within the bank, our regulators, and there are a number of different people that are consistently looking at those ratios. And so from that standpoint, we're held to a standard of safety and soundness. And so we are managing organizations in a safe and sound way. With that said, though, Andre, unfortunate circumstances like what we've gone through in the last 3 years, where we've gone into a global pandemic, where we've had to resuscitate the economy by artificially pumping in resources into it, and then ultimately ending in a case where we have historically high inflation, and now we've had to abruptly change interest rates. Those types of things put stress on even the most highly regulated, the most safe and sound process. And unfortunately, in that case, some banks, potentially, may fail if they have not, managed appropriately. But overall, banks are sound. The industry is sound. It is safe. Going to your point around relationships, absolutely, it's important, to have a relationship and establish a relationship. And I would not say that it is a necessity to manage your finances through multiple organizations. I think that you can be safe and sound with a organization, but if that is your choice to work with multiple, then you do that. But when you say that we're a relationship, I think that's where the importance is. Because if you are having a true relationship with an organization and you have a true relationship manager that's working with you, then I would say, and I know this is true at Bremer, we are constantly working to make sure that our customers, whether it's a consumer, small business, or large corporation, we're putting them in the best position possible for their financial situation. And we are taking those things into mind of what not only keeps us safe as a bank, but what keeps them safe as an organization. So relationship does matter. And that is what you want to find wherever you bank, is to make sure that you have a true relationship, which means that relationship manager understands your unique needs within your business or personal life.
Absolutely. Absolutely. Well, we're getting close to our time, unfortunately. I've really enjoyed this conversation. I just have one last question for you. A lot of people don't really understand the difference between a credit union and a bank. Could you just talk a little bit about that, and then just tell us why should someone choose Bremer Bank? I've heard a
Sure.
lot of great things about Bremer, so
Yeah. Well, I appreciate that. And I appreciate hearing great things about Bremer. It probably would take a little time to really speak about the difference between a bank and a credit union. But generally, the difference, I would say, is that we're certainly regulated by different entities. But a credit union is probably a term that is more, think of a co-op. And so you think of that as being members as part of a credit union, and those members are really technically owners of that credit union, and that functions that way. But a big distinction there is that a credit union does work as a quasi nonprofit organization. A bank, which certainly has customers, and as a customer, you do have deposits within a bank, and so you are certainly a big part of that. But obviously, banking organizations work as a for-profit organization. That's probably the biggest distinction. And to your point around what is different about Bremer Bank, you mentioned about hearing some of the great things. I will go back to the fact of relationship. There's a couple things that I would say that are important about people to understand about Bremer Bank, and that is the differences between banks as we operate are very, very small in terms of, as I said, those gauges, what we do, how we function within the industry. What is different is culture. And I would say that we at Bremer Bank have a culture of relationship, that idea of really truly understanding our customer, and really the culture that was really ingrained in us from our founder 80 years ago. And Otto Bremer really understood that banking was about lifting communities. And so our culture is different from our purpose of cultivating thriving communities. We do that every day. We do that every day by engaging closely with our consumer customers, our business customers, understanding their needs, and maybe making sure that those needs are being met consistently and, again, in a safe and sound way. And so, as I said, what banks offer are generally the same. How they deliver it is different. And I would say that I feel, and certainly me being part of it, that we do that in a very different way. And that is by truly engaging in relationship banking. And that's what makes us different. And hopefully that's what's driving those positive things that you're hearing in the marketplace.
Awesome. Stephen Spears, everyone, Senior Vice President, Twin Cities Community Banking for Bremer Bank. Thank you so much for being here today. As I always say, it's not about how much money you make. The power is in how much money you keep. Thank you so much for being here, Stephen, and we look forward to having you back at another time. Take care.
Great. Andre, thank you for the time.
Hi, I'm Shaletta Brundage. I'm a media personality, podcaster, and a business owner. But my most important role is mom. 3 of my beautiful kids have been diagnosed with autism spectrum disorder. When I didn't know who to trust or where to turn, I found ACRA. ACRA provides home care services to families all over Minnesota. The care is not one size fits all. They know each one of my kids is unique. They listen to what resources we needed and what's best for our family. I've seen my kids grow and thrive with ACRA's in-home care. While autism is the most common diagnosis among ACRA clients, ACRA offers personalized in-home care services for people with disabilities, chronic illnesses, behavioral diagnosis, and mental illness. They work with children, adolescents, and older folks too. Find out more about ACRA at their website, acrahomecare.org. ACRA helps me provide my kids with a better quality of life. They can do it for your family too.
Your research is done and you've made the decision. You're ready to get the COVID-19 vaccine. Here are a few things to know before you go. Vaccinations in Minnesota are free, but bring health insurance information if you have it. It's okay if you don't have health insurance. You don't need it to get the vaccine. Bring your legal ID too, if you're comfortable sharing it. But a legal ID is not required for you to get the vaccine. When you get your shot, you'll get a card with information about your vaccine, or you can keep track on an app. It's easy to find the closest clinic or pharmacy where you can get your free vaccine. Go to vaccines.gov for your nearest location. That's vaccines.gov.
Children's Minnesota, the leader in specialized healthcare for kids, is here to raise awareness, standards, the bar, the stakes, the question, the curtain. On raising kids' health to the highest priority, kids need equal access to healthcare, more pediatric expertise, a voice for change. Kids need us, all of us. So let's raise them up. Children's Minnesota, the kid experts.
You know Shaletta makes you laugh, but did you know Shaletta Brundage can also make you think and boost your business? Media personality, activist, and comedian Shaletta Brundage founded Shaletta Makes Me Laugh to celebrate and share the best of Black culture. It's a podcasting platform. You can download 10 weekly podcasts hosted by African-American subject experts at ShalettaMakesMeLaugh.com or wherever you find your favorite podcasts. ShalettaMakesMeLaugh.com is also a production house, creating broadcast quality commercial content. And Shaletta and her team of storytellers create powerful promotional campaigns to get businesses the brand awareness they're looking for. Some of Minnesota's top businesses trust Shaletta, and you can too. Get out the word about your events and products and get in front of communities of color with ShalettaMakesMeLaugh.com. She's got the power to help your business.